Hello everyone, Scott Stillwell with SunTrust Mortgage. Here today to talk to you about the items that you'll need to provide for underwriting or to underwriting to go along with the loan application. In the olden days, or a few years ago before the mortgage crisis, there was a lot of loans that were done with little or no documentation. Not quite the same today in this environment, although it's not as bad as what some people would seem to think. As far as the income side, a lot of it depends on how your income is derived, whether you're a self-employed borrower, whether you're a salaried borrower, whether you're retired. For a salaried borrower, you're going to be looking at a W-2 from last year, a pay stub, current pay stub. It's going to cover the last 30 days. And then if you're a self-employed borrower, we're going to be looking at 2 years tax returns, both personal and business. If your business is derived through comes across as a Schedule E. If you're in the tax season, say you're into 2013, you haven't filed your 2012 taxes yet, they may want to see a profit and loss statement for your business also. As far as a retired borrower, most of that income is usually going to be derived from Social Security, pensions, maybe IRA distributions. If it's coming from Social Security and pensions, 1099s from the previous year will work for that. If you're getting IRA distributions, we'll need a letter from the provider showing how much and the frequency of those distributions. As far as the asset part, you're going to need to provide at least 1 month's bank statement from the account that the assets are going to be coming from for the down payment. If you're liquidating assets, if you're selling stocks or bonds or something out of an IRA, 401k, the underwriter will want to see the liquidation of that. The money's moving into your account and both sides of that transaction. Some other items that you may need to provide, if you own other properties, the underwriter's going to want to see a mortgage statement to determine whether or not the taxes and insurance are escrowed, because there'll be a dollar amount that'll be coming over from your credit report. If they are escrowed, obviously, then they have the total picture. If they're not, they'll need a copy of the insurance bill and the tax bill, so they can figure out what the total cost is of that property, as well as if there's an HOA fee that's associated with that. If the property's being going into a trust, they'll need to see a copy of that trust agreement to make sure it's a irrevocable trust. So the process is it takes a little bit longer than it used to, but it's if you have these documents and provide those up front, it's sure going to cut a lot of time off of the process. So.